So thank you so much for being here. I want to start. I'm going to share, if that's okay with you guys. I'm going to share a couple of things that some of my takeaways from this conference. Today we were at the Wealth Conference, and there's one thing that one of the speakers mentioned, and I'm reading, so I'm looking down. So learning basis, the learning basis. Every time we are listening to a concept or a new topic, the very first time that you listen to it, whether it's, in this case, I was just learning about Bitcoins and just the other different energy investment, like completely outside of what we normally know and have mastered to some degree and what we feel comfortable with. And then all of a sudden you're exposed to something new. Every single time that we learn something new, it's going to be thick. You're gonna get like so confused that maybe you capture, I don't know, 5-10% of what was said. So the message here is, one, to be patient, two, to have the repetition, to keep coming back and listening to this material. Maybe have a recording, you listen to that. So the learning basis gets higher with repetition. So learning basis is like what you know about the topic and what you capture. So the more that you repeat, the more that you're exposed to it, the thicker the level of understanding that you gain on that given topic. Okay, so if this is your first time, if that you're here, maybe you're new to this business, be patient. Be patient. Keep showing up, reviewing your notes. Maybe you have a recording, listen to it. And what I will say also, because sometimes we think like, well, this didn't help me or didn't give me all the answers, and we go and buy something different, something new. Like, just go back to the things that you already have access to, things that you already are being exposed to it, and then before you go on and spend something else. I often tell my mentees or people that I get to coach, and I say, yes, I get to coach because it's a privilege to even be here to talk to all of you. And I see that my internet is a little skippy, so I apologize for that. Um, so I will try not to get too ahead and to enunciate, make sure I don't lose you. But so yeah, and I tell people that we meet in events, the events that you attend, maybe the events that we met at. We put a lot of money, a lot of time, and travel time, and maybe you're still working and having to take some time. All of that is what you're spending on in your own education. So don't go back and buy something else. Seriously, go back and review what you learn. Just remember that the learning bases are going to get higher the more you repeat. Okay. So I just wanted to start with that because, again, many times we get upset or we get frustrated because we just don't seem to get to the first deal, or maybe you're in the first deal and you're looking for the next one and you don't seem to move fast enough. Um, be patient and stay don't change your criteria, don't compromise your goals. Okay. But continue to show up, continue to participate, and be very intentional. This event that right now, it's not free. No, I'm not going to charge you anything. What I mean when I say that is that it's not free. You are here. You're taking time from your family, maybe for, going out. It's a It's actually Saturday. It's Saturday night. Many people is out there living life, and you're here. That shows that you're committed, that you're ready to welcome the next challenge, and that you're being intentional by being in a community that is going to allow you to get to the next level. The other thing is ask questions. I mean, listen to look at all this. I don't know if you can see it. I'm blocking it. But this is just one page. I have pages and pages and pages of questions and notes that I wrote. So never lose your curiosity. Don't lose your curiosity, and like in, I we know something to us to a level, but there's always a different level. There's always that higher level that we should be putting ourselves in situations that we are learning and we are stretching our knowledge, or span of knowledge. There's another thing that was said at towards the very beginning, um, and it was, you don't know you don't know what. Okay, I'm gonna read it from here. You don't know what you don't know. Your coach can help you find what you need to know. Like, and the other thing that this was an answer that I'm trying to think which speaker. It wasn't Bob. Oh, this is a he is like a, I don't know how many billions, like I think $17 billion net worth. And he said the biggest mistakes that families make when building wealth is not getting a mentor. And he said everybody should have a mentor. I mean, he's worth so many billions would be of dollars, and he's still hiring coaches and mentorship. We are certainly always have like at least three or four mentors and coaches ahead of us. So again, it once that maybe you gain some knowledge, also offer to be a mentor to other people, because when you learn something with the intentions of teaching that to somebody else, it puts us in a way that in a different way of learning. It makes us more intentional. So I highly, highly invite you to consider that. Teach what you're learning to your kids, to your grandkids. Learn something with the intentionality to teach it to somebody. So those are some of the notes that, well, I mean, I have lots of notes, but those are, I just wanted to get started and get us started, and again, being intentional. Let's see. Uh, the target is. Oh, okay, here's another one. This one, the target is easier the closer you get. And this is something that from the military we have to learn. You have to qualify for shooting at a certain distance. And when we were closer, I'm like, well, this is much much easier. Plus, you're nervous and whatever else. But the reality is that the closer that you are to what you want to reach, the easier it seems to get. So let's suppose that this might be maybe your first time that you're here, and you're like, I was invited here because I want to learn more about real estate. And you're like, well, I'm just here. And then the next level is like, well, maybe we meet in person. The next level is like, oh, now maybe we're doing a deal together. And or you're investing passively. And then the next level is like, well, I want to partner with you. So the closer that you get to what you want to achieve, the easier it is, because the target is so much closer. So if let's suppose that we met in the internet, or the social media, or and then you're like, I don't know, like I'm just following you. I get this a lot. Like I was follow you from your social media, and it's so distant. Like the kind of questions that I receive, or the type of comments that this level, when we first get introduced in that capacity, are so distant. Like, oh, I hear about multifamily, or I hear about real estate investing, but they're different levels. So the questions that are here in this room are more like, hey, how do I do this? Like, I seriously, I have a deal. Like, it is completely different. That is because you're closer. You're in that vicinity. You're in that community, and then you start, like, again, the level of knowledge start getting thicker and thicker. You start retaining more, and maybe instead of just getting 10% of the conversation, or the explanation, or the webinar, now you start getting a higher amount of a percentage of the content that you are able to understand, to the point that now you're like, okay, I can help you teach these steps because I already know them, and I've been intentional. So anyway, I just wanted to give you that perspective. So yeah, we are also meeting with a lot of people that are getting started, and I get a lot of questions. But if you're here and if you have questions, let me make sure that the chat is available so that you can, or the Q&A is available so that you can send them that way. It's easier for me if it's sent that way. That way I don't get distracted or looking for them. But if you're here and you have a question and you want to raise your hand, we can do that as well. So you can raise your hand and I'll bring you in as a panelist and we can have a chat. And if you all want to raise your hand and you want to be in the room, not the only one speaking, I'm okay with that too. Okay. But yeah, some of the questions that I got, I mean, this is literally from this event, just because they're fresh in my mind. How do I get started? There's so much information. And if you're not using AI and in any capacity for your life, for your business, for your gifts, shopping, uh, painting, whatever, like there's so much information that the lack of knowledge is no longer the reason why we're not achieving what we need, what we're set to achieve. Um, it might be intimidating at first, but with the technology that we have available these days, knowing or the lack of knowledge should not be the reason why we're not achieving the goals that we want. So what's the reason then? What is it that we're not, what steps are we lacking? What are the things that we are not doing that are keeping us from reaching our goals? So anyway, so if you have a question, just raise your hand and I would love to bring you in the panelist room. But so some of the questions are like, how do I get started? Like there's so much information. I'm like, I don't even know where to start. Well, start somewhere. Like start in immersing yourself in the new world. This is a whole different world, new terminology. If you don't understand a word, write it down to the best of your abilities. I remember when I was learning like the syndication, I didn't even know how to spell syndication. And I can prove that to you because I found my notes from the first time that I learned the concept of investing as a group, which is a syndication. I have no idea. JV, investing by yourself, like all of that was foreign. All I knew is that I wanted to have enough money to buy to put as a down payment for a house. So again, if this is new, write it down. But as far as the structure, we do have steps, and this again has been after many years of like doing it and then just kind of figuring out. Now we do have a, um, a set of steps, framework per se. If you were to do a surgery and you don't know what the framework is of where I need to pick up my patient and where am I gonna take them after I'm done with surgery, like if you don't have those steps, it's gonna be really choppy. And as I use the example of a surgery because that's just my language. But if you don't have those steps, um, it is going to be really difficult. So the very first thing that I will say anyone should do, definitely all of us here, if you're new to this business, or if you got started and you're like, okay, I'm stuck now. I can't find any deals. I don't know where to look. I don't know where to find partners. Always go back to the framework. Um, and if you're hopefully in a place where you can write the steps, I'm gonna go over it with you, okay? So the first thing that I would say everybody here should do is define your acquisition criteria. Identify what kind of properties are you looking for. When you do that, you're gonna narrow your search. What do I mean by that? Let's say that we meet and we're like both looking for real estate because we both know that real estate is the way that we want to build wealth, and both of us are looking for deals. And I'm like, I don't know, I'm looking for like just real estate, the cash flows. Okay, well, what else? How big? How old? What market? So if you have all these criteria well identified, you're gonna stop looking for the wrong thing, and you're gonna stop using your resources in the wrong way, in a way that is not going to give you a deal. And you're going to just keep finding doors that are closed, or are going to be chasing deals that are too big for you. You're going to be looking in markets that are not the ideal market. And what's going to happen? Let's suppose that you do find a deal. And then you're like, okay, I found the deal. I like it. It's in the market that I'm looking for, and I now I'm ready to bring it to a potential partner. And then you bring it to the potential partner, and they're like, yeah, that's not the type of deal that I'm looking for. So you just went and spent all this time and all these resources looking for the deal that you didn't know if it fit your criteria because you didn't even have a criteria, and then you brought it to somebody that you didn't even know their criteria. You see how you can do that dance all over again and again and again, and that can be so exhausting because you're knocking at doors that have the wrong type of property. So first thing you need to do is identify what kind of properties are you looking for. And that doesn't mean that you're going to be set for life, like this is the only type of properties you're looking for. It doesn't mean that. It just means that for the first whatever amount of time that you give yourself to master this information, that market, that asset, you're going to then focus on that. I will say if you're new, I will say at least 3 months, give yourself 3 months to do as much as possible to learn the market, identify the specific market. I get a lot of people that are new and they're like, I'm looking in Florida, and I also hear that Arizona has a good market, and oh, by the way, North Carolina also here. Like you're all over, like literally across the U.S. What's gonna happen is you're gonna say, okay, I'm gonna go to Texas and I'm gonna meet like this many brokers so that they can send me their deals. Oh, I also need to do the same thing in Florida and the same thing in North Carolina. So all of a sudden you're knocking at three different doors, three different markets. And then you're like, what? I'm looking for maybe 12 because I'm gonna do this by myself. No, no, no. I'm looking for 34 because my mentor told me I need to do 34 or 32 units. No, no, no. But I also hear that it's better to have 100 plus units. So you all of a sudden have to look for brokers that have the 12 units, the 32 units, and the 100 units across three different markets. You see how that's very inefficient in a way that you don't niche down, the way that you have to be talking to three different markets, maybe three or four brokers per market. Instead of that, what if I said I am gonna study North Carolina? I'm gonna learn about the how do I do business there? What are the rent looks like? What are the rent increases I can achieve? How are my taxes being assessed? What other expense ratios I need to consider? And so you like literally like take that time, maybe 3 to 6 months, to learn as much as you can on that market, and then analyze as many deals as you can find in that market, deals that fit your criteria. Let's say that you want to go after 100 plus units. So you're going to be talking to a handful of brokers for that one market, and you're going to analyze all of the deals that come your way. Whether you think they're too expensive, that you don't think you can raise the capital, you like all these objections are going to come in front of you. Just go ahead and repeat, repeat, repeat. Okay. So step number one, define your acquisition criteria. All right. Then you're going to go look for deals. Well, where do I look for deals? So many, again, do not buy anything. If you at the end of these 10 steps, if you bought anything or gave any money to anyone, you've done something wrong. Okay, my goal is to give you these steps so you don't have to spend one more dollar. Okay, unless you're ready to pull the trigger, and then yes, you're gonna have to be capitalized so that you can have enough money, you and your partner, so that you can go after the deal. Okay. Right, finding the deal. 'Cause I'm telling you this because I hear so many people that like, okay, now I'm ready to find the deals. Have my market, I have my brokers, but I don't seem to find deals. So I'm gonna pay for this platform. They're telling me they can get me some deals. You don't have to. At the beginning, I get remember, unless you already know that maybe you already have some relationships, maybe you already know that the deal makes sense first pass, then you want to invest in like we use CoStar. So again, at the beginning, don't think of I need to buy this, I need to buy that. Nothing, nothing. You can do all this by hand, okay, and by relationships and by talking to people. All right. So finding the deal. Craigslist is one that I recommend to a lot of our mentees because it gives you visibility to some deals, and then what you do is you go in those offerings, click on whoever is listing them, whatever broker is listing them. Usually they have their website there. If you visit their website, you're gonna be able to you're gonna be able to subscribe to their list release. So when you sign up for the list release, they're gonna send you everything they have. You can choose what kind of assets you want to see, but you're gonna be able to see all of their listings. So do that with as many deals as you find in that platform. Again, as of now, you haven't spent anything, okay? And again, please put your questions in the Q&A. So if you have any questions, we can work on that, okay? In the meantime, I'm gonna keep moving through on the steps. All right. So yeah, defining your criteria, finding the deal. At that point, two things will need to happen. One, if you have everything you need, and I'll tell you what you need, but if you have everything you need, then you're gonna go and underwrite the deal. If you don't have everything you need, then you're gonna call the broker. Okay. And I know these two steps that, I mean, I can teach a class on this because I'm giving you just the overview. Remember, we're overviewing the framework that it took us years to figure it out. Okay. All the steps and what order. Okay. Um, so again, if you have everything you need, you have rent rolls, you have financials, you have a T12, T3 or T12, and then you can analyze the deal. Okay, analyze the deal. Then you're gonna come up with questions for the broker. So you would then call the broker. But if you don't have everything you need, you probably need to either email the broker or just pick up the phone and call the broker. So regardless, when you call the broker, you want to have enough information to ask them questions, pertinent questions, okay? This is another step where I see a lot of people that are new getting blocked pretty much because the first thing that they when they call the broker, they just don't have the confidence, they don't have enough information, maybe they don't know how to formulate questions that are pertinent to get more information, and then they just like their slam door. Okay. So again, between contacting the broker and analyzing the deal is going to be depending on what information you got or you're missing. All right. Right after that, what you want to do, and again, this can be like, well, I met somebody and I'm talking about raising capital. So all of these steps are going to be needed. But this is the order that I would recommend. Okay. So you want to find your partners. Again, remember, I mentioned that if you're looking for a deal and you find a deal and it passes your first pass analysis, then the next step is to write an offer. Well, many times when you're new, you're not going to feel confident enough to write an offer. And I would not recommend you to write an offer without having somebody else that has more experience look at your numbers. I have seen, and we have rescued some people that went, excuse me, that went ahead um and sent an offer, and then they realize, oh, these numbers, after we talked to them, they're like, these numbers don't produce any of the returns for my investors. So you want to have somebody that has the experience analyze that deal for you and with you. Okay, that's your step number 5, finding your partner, a senior partner. um then together you are going to come up with an offer. So writing the LOI. When you put together the offer, you and your partners are saying, I'm making these assumptions, and after I make these assumptions, I feel comfortable offering this price. Okay. So think about it. If you didn't bring your investor, I mean your partners before you submit the LOI, whoever comes to be your partner after that, and if the LOI is accepted, then that partner is going to be agreeing to all of the assumptions that you make on your underwriting and all of the contingencies that you put or didn't put on your LOI. And that's why it's so important that you involve your senior partner before. Okay. And even I mean, we probably close, I don't know, maybe at least in four or five deals, and we still have we use coaches, so we always go back to, hey, what do you think about this? And like right now, we had gained enough experience, and so we can help you. But before, we always engage, and even now, like if we have a new situation, a new something every time we go and get an acquisition, something new comes up. So it's good. It's a good practice to have, to engage other people. Like maybe they're not partnering with you, but they've seen other deals. Maybe they know the market and you don't. Maybe they have deals already in that market, and this is your first deal. So just because you have closed in some deals, maybe it's another market, maybe it's another size of deals. You always want to be in a community, and this is why we do all of this gatherings, because it never fails. We have people that brings up some points, and that engages conversations, and we always try to do that. That's just good practice, okay? So yeah, writing the LOI, and at the same time, and again, those some of these steps kind of like overlap. So the step number 7 is to get a quote from your broker, from the lender broker. Okay. So you want to see if this deal makes sense financially, or if it's lendable. Now, what if you may be thinking, well, what if I don't know what my interest rate is going to be? So I do need to get a debt quote before I actually submit the LOI. And you again, this just because we know what is about what is the interest rate that we're seeing other people close, or maybe we're always talking to brokers, lender brokers, so we it's a casual conversation. Hey, what are you seeing on this type of asset? Hey, what are you seeing in this market? What are you been closing on? What of course you're getting information from newsletter, from lenders, or from the community. So maybe you already have an idea of how much an average you might get. Let's say that maybe right now we're underwriting at a 6.5, but then we hear like, oh no, somebody got 5.5. We would not underwrite, or we would not yeah, write the letter of intent to purchase, or the LOI, with an assumption that just because we hear that somebody else could get 5.5, all of a sudden we're going to underwrite with 5.5. If the guidance is 6.5, we're gonna stay there. You don't want to like overly be enthusiastic with your assumptions. I'd rather be okay with like underwriting with, let's say, 6.5, and then finding out that I can get a 6% interest rate. Okay. So again, all of this, if you don't have that information, maybe it's safe for you to go ahead and get and talk to the lender and get a quote before you submit an LOI. So again, these steps can be interchangeable, especially with depending on what your experience on or who is in your team. So that'll be about number 7, getting a quote. Once that you get an acceptance or guidance from the seller that they're moving towards getting those, closer to, or making the decision to give you the deal, at that point you're like, oh my gosh, this is a good deal. I offer this much, and they took my offer. So all of a sudden you find yourself like, oh, the next step is for me to raise capital. Where am I going to get my down payment? Where am I going to get my loan from? So this is when you get on more serious and in detail conversations with the lender, and as well as potential investors and potential partners, because at this point, once that they sign the accepted LOI, the next step for you is to go into negotiate the PSA, the purchase sale agreement. At that point, once that both parties agree to sign the PSA, you are legally under contract. The LOI is not as a non-binding, is a non legally binding document. But once that you get past that, so then you're gonna be legally binded to whatever agreement that you sign. Now, we have seen some sellers that they want to move directly to, and no, I don't need an LOI. I thought, let's just go ahead and get to PSA. PSA, whatever escrow money that you put up front, and any other expenses, for example, getting inspections, getting the not the lender to quote, but getting the lawyer to get started with your documentations, your entity formation and all that stuff, that money is gone. So just be careful if the broker seller broker is pushing you to move fast, and you have no, if you're comfortable moving forward and you already know this deal, you have the partnership together, move on, like go ahead and get it done fast. But if you're not there yet, you definitely want to slow down so that you have time to get all of your team that you're going to need for acquisition, for due diligence, to complete all the due diligence. You don't want to be rushed into getting under contract and then having this many days to go to the due diligence and then have to close. Okay. So as you can imagine, between the time from the time that you get an LOI accepted, there might be back and forth negotiation. But then at that point, if you were awarded the deal, the next step is to go under contract. And at that point, your clock is ticking for completion of your due diligence as well as your equity raise. Okay. And between all of this, there's so many steps that are the tasks that you need to complete. Okay. So I don't want to oversimplify it. But I just again wanted to give you a review. Okay. So raising the capital, and the next step is closing the deal. And as much as much work as it takes to look for deals, analyze deals, review the underwriting, call the brokers. I mean, you might be doing this dance for 100 times before you have actual one deal that makes sense. So you see how it can be so time consuming, so disheartening sometimes to be like, deal after deal after deal. So, so it's important to have the support as well, to have a team that is going to, being able to do a debriefing of why this deal didn't make sense. Why did we have to step away from this deal? We do that all the time. Sometimes we have some team members that are already involved. Sometimes it's just Chris and I, and be like, no, I mean, this deal didn't make sense. Look, this is blah blah blah, and then we just do the debriefing because we want to make sure that we didn't miss anything. Like, what are the assumptions that we make? Did we on the road with the interest rate? Maybe do you think the interest rate might be a little better in this area? Let's call this the lender broker. And so you get more information, but you're gonna be like doing this step to one to, I mean, one to four, one to five, one to six many times. There's been so many deals that we went through these steps and then we have to walk away from. But it builds you. Again, every time that you do it, you get faster, you get more confident, you get more resources, you have more, I won't call shortcuts, but you get more efficient at the steps that you need to take. And you also get to move to, towards the deal or away from the deal much faster. I know that we on the road deals, in the morning we went through the numbers, and then by night we're like, yeah, this is not a good deal. At first we thought it was a potential, but then after doing this and that, then we realized this is not a good deal. What? But you didn't hang around for weeks. I mean, we've seen people that started underwriting a deal, talk to the broker, like we meet again in another week, and like, yeah, I got some information, and now I'm like, you have a whole month. Yeah, that's a long, long time. So if you were like, if the goal was to get this first steps in place in the first 3 months, and you're taking a whole month to underwrite one deal, you see how this is going to be expanding? It's going to be another year before you're like, okay, I underwrote 12 deals and now I feel comfortable, under analyzing. So get really good at these steps. That the first steps, which is again, once that you define your criteria, but finding deals, calling the broker, analyze the deal. Finding deals, calling the broker, analyze the deal. And again, finding the deal, calling the broker, analyzing the deal. Those steps can be interchangeably. And then all of a sudden, it's almost like you're pushing, you're pushing, you're pushing, you're pushing, and finally, like the piñata, that's what I'm thinking. And finally, one time you like get a good hit, and then they're like, oh my God, I'm inside the piñata. So all of this stuff is happening, Now as another skill I have to master. So now you're gonna be like, okay, well now I need to analyze the deal. I mean, write an LOI. Well, now you're gonna have new obstacles. And then once that you get past writing an LOI once, twice, you're like, "Psh, I can do an LOI." I mean, I've done LOIs on my cell phone. Like we have the template there. I just changed the date, new address and new price, and everything else is there. So you're gonna get much faster. And then you're gonna be like, well, I'm gonna send this LOI, and I'm also at this phase of this other deal. And by the way, the broker is calling me because they have, a negotiation. So you might have two or three different deals on the making. So but if you're taking so long, and if you're you know just not moving on to the next step, it's going to be really really hard for you to go on to the next step. And I'll tell you why. Because you got so comfortable doing the step number one, two, three, four, and then you're so scared because now you know these steps, and then you're so scared to go on to the next level, which is sending an offer or calling the lender broker, because it's something new. But I guarantee you, once that you've done it a couple times, whether the deal went through or not, you already seen the process, and then you're hitting to the piñata and to the good stuff is gonna be much faster. So anyway, I think I gave you the framework, and this is what we do. This is what we do all day, every day, and many many times. And again, so many times we have deals that like right now we have one that is closed already. We are in the doing executing the capex. We have I mean we had one that we put an LOI, it didn't go through, and we got feedback and it wasn't a go. We have one that I have two LOIs that are out there, and I'm still waiting for the brokers. I have one more that just got a lead on. I don't know if it's going to be a good one because we haven't done. I just literally got it, yeah, this afternoon. So yeah, do you want to get fast on this? And this is what our mentors teaches us. Like just go through through your email, and you quickly are going to decide this is a good, this is a no, this is yes, this is no. And now we have our team, like they have our acquisition criteria, and then I give them like, okay, I'm looking for this is this, and on this asset I'm looking for this and this, and for this other asset I'm looking for this and this. So they're like literally going through my email and saying, okay, this is not a good, this is not a good. And then once in a while they find something like, hey, I know this doesn't fit your criteria, but look at this. Oh, actually, we also have a double net deal that I think yes, I sent an LOI on that one too. Um, but you start training. I mean, if you have grandkids, or if you have kids that know well you can show them the quick analysis, and they can do that for you, and then just show me the things that the deals that pass this criteria. And maybe you start with like, anything that comes through my email that is in these markets, show it to me. Okay. And then, well, now the size. And then you start slowly training them, training your team, training your kids. We have our team, and they have the criteria. But again, it all goes back to number one, step number one, most important one: define your acquisition criteria. Okay. So for example, if I have my team bringing me 1960, 1970s, 1940s, like, yeah, I told you my acquisition criteria is 1980s and above or younger. Okay, so you immediately are going to give that clear direction. Those are the rules of engagement for your team. All right. Okay, so that was the framework, and hopefully it answers to you what do you need to start. Now, let's suppose that you don't want to look for deals. You're okay with somebody else finding the deal, and you want to jump in a deal that maybe is already structured. So what you come back, let's suppose that I had no three people, they have a deal, and I'm like, well, I am looking for deals, but if you have a good deal, send it to me. And we do this all the time. Hey, if send me the deals. If we like it, we might be able to jump in. And let's say that you come in and the acquisition, the letter, again, you have to be comfortable with the assumptions that were made by the team. But let's suppose that we worked together before, and I'm like, you already know how I underwrite. I already know what kind of a risk we want to take. So let's say that I come in, and you're almost done with everything. We still need maybe somebody to sign on the loan. Maybe we need some capital, and I'm like, oh, I can do that. And all of a sudden, I can jump in another deal, and I didn't have to do step one, two, three, four, but I can go back and verify. That's part of the due diligence. Okay. So let's suppose that you're very well connected. You know a lot of people that want to invest with you, and you can go and do the capital raising and the structuring of the deal, and understanding all of the assumptions, and you're okay with that, and then you start getting in a lot of more deals by bringing investors. Because some people, it's just, I don't, not that they're not good at it or they don't want to do it. It's just like, I don't have a lot of fun underwriting the deal. Therefore, I find a team member or a group that is comfortable doing that, and I can feel comfortable jumping with them at this certain level. So, and maybe let's say that you have a deal that you close on, but at the same time you're looking for other deals. Okay, so you don't have to be like doing like a step by step at the, you don't have to be waiting for, like, I am not gonna go look for any deals because I'm waiting for this LOI. You know, so you have to be doing this cycle, this framework over and over and over, and the more you do it, the more you're gonna have deals that you're gonna close on. And speaking of deals to close on, we have one of was it I don't remember who is this who was the speaker, but just economist, oh, microeconomist, I don't remember his name, but I'll post it somewhere. But he talked a lot about this being a very exciting times to acquire, and this is exactly what we've seen for two reasons. One, um the transition, politics and all the stuff, all the changes that are happening, that the change on interest rate is starting to sound more promising. And again, none of this is a prediction. I don't have a crystal ball, but what we are seeing also, we're seeing more transactions being closed. So we're seeing more sales. Okay, we're also seeing more deals. We are seeing deals that have to sell. We have, because for the past year, or even some deals, even year and a half or 2 years, the lenders have been working with the owners or the operators, and instead of foreclosing, because the deal wasn't performing well, instead of doing all of that foreclosure, they modified the loan. They bought some operators, the operators, some time to get to a better occupancy, maybe some place that you can cash flow more, or work on the refinancing of the deal, or just what you're trying to do is you're trying to change the lending, because many deals went on the really just, I would say, challenging situations where the lending is the one that is being challenged in the property, not necessarily the property or the operations of the property. So, but we've seen a lot of those lenders that are fatigued. What I mean by that, they're not willing to do more extensions or more concessions, so they already burned all of the strategies that they gave, like a discounted price, discounted rent, not rent, but interest rate. Maybe they gave a type of a concession, move some of the payments from immediate to the end of the loan. We've seen some loan modifications that either fix the rate, a higher rate, but they fix it so that the operators can again buy some time. But at this point, we've seen several deals that are like, actually, two deals we on the road, one in Houston and one in San Antonio. We submitted an offer in the one in Houston, and they were already owned by the bank. So these deals are starting to come around, and the bank, after they repossess them, they're gonna stabilize it, or they actually have to pay an asset manager. So 40 to 60,000, sometimes 80,000, depending how bad the property is or how heavy it is to operate. But they're having to make that payment on top of not being able to get their monthly payment covered. So they don't like that. what they're trying to do now is get rid of the assets by selling it and recover as much as possible of the loan that they put in place. But for example, the deal that we submitted an LOI, they wanted to sell for 11 million. It was at I'm sorry, 144 units, I believe, and they wanted to sell for 11 or 11.5. We on the road at 9.25. The highest that that deal cash flow or that could um, support was at maybe 9.5. So, and that's because the occupancy was low. So, what is going to happen in this type of acquisitions if the occupancy is being challenged, or the lender that they feel like that you need some period of stabilization, they're going to ask you to close with, or maybe the only option that you have to close or to acquire these properties is with bridge lending. It's not the same thing than floating interest rate. Okay, but there's bridge lending. Normally, they're more easy to work with. They actually want to give you more money, like so they give you the down payment plus capex. You know, so the goal on this short-term bridge lending is that you go in there, fix the property, get the occupancy higher, get it to a more stable condition, and then refinance. And many times on that type of refinancing, you might be able to get some money out, or at least not have to put money in to refinance. But what's going to happen is that you get that asset, you stabilize it, and then you go in and look for something more permanent. Um, and this is what we call the opportunistic acquisitions. We on the road another deal. This was in DFW. It was a 250 something units. Um, let's see, I'm trying to remember. The occupancy was like 83%. So clearly was not going to qualify for traditional lending. And that was the strategy. Again, we did an offer that makes sense because you have to plan for not having occupancy for that amount of units. So it didn't support the lending that they trying to the price that they kept trying to push it for. So we again step away. But again, you're exercising this muscle. You're going through the steps. You're completing repetitions. And if you're in any kind of sports or kind of endurance, you know that the more reps that you put under your belt, when it's time to actually go and perform, the better and more prepared you're gonna be to take on that challenge. So in this case, the more the times that you're on the right, and then even if the deal doesn't make sense, you get so much knowledge. Okay. So again, you don't want to do it by yourself, but definitely you know, get somebody that has more experience. Let's see. Let's see if there's any questions here from you guys. I feel like I've been the only one talking. Well, I'm the only one talking. If you want to ask the question, and if you just raise your hand, I can bring you in and as a panelist, and you can ask your question. All right, so that's one of the again the most common questions that we got, and then also some of the things that we're seeing on the market. um, a lot of people are talking about the end of the year, and I mean we're almost there with all the holidays that we have in front of us. This is actually considered now the end of the year. Now there's still some transactions that might happen. Um, we do have a deal that we could sell. So we are actually, since we closed on the property, we are now focused again on heavily going and looking for deals. Um, so yeah, we have that. It's at 2022 mobile home park. I put it out there in the community, and if you're interested in and just taking a look at the numbers, let me know. I can send you more information. But that property can be sold if you're looking for a 1031. Actually, I was just talking to somebody that has a 1031. And then another person that wants to get more depreciation in this year. So you'll see that kind of I'll say situations where maybe you are talking to somebody and you happen to know the other somebody, so you're all of a sudden a connector, and you can be put in a position where maybe you go in a deal because of all the connections and the conversations you're having. So being able to stay connected to help others and connect with, you never know what the possibilities are. Maybe you don't get in that deal, but what if you get into the next one? Or because you make that connection, they put you up front for the next deal that they're going to acquire. At least that's what we do. And, we understand this last minute situation. I actually talked to another person that she's going to be selling something, I think by February. So not necessarily for this deal, but she's already looking for, like, what I need to place $2.5 million. I need to get, start a conversation. So what if I don't have any deals and I'm trying to connect, and I all of a sudden put this person in contact with somebody else, and that somebody else has a deal. So never underestimate the kind of conversations that you can get, or the kind of situations that you can get, by just understanding what is the other person looking for, what kind of situation they might be in, and then just connecting. That we're always looking for that. But so yeah, the end of the year. So right now what we're working on is closing, pretty much closing the books and or deals, and moving right into the tax season. Yes, the tax season is coming right up, and as if you're a sponsor, you're responsible for issuing K-1s for your investors, and for your partners. So I mean, not you, but your accountant. So you should be working with accountant. That's what we're doing. We're closing on the books, and then talking to our CPAs, talking to our teams to get all of those documents ready. And you never, this is a time for you, if you're invested in a deal, go back and make sure that all of your information is correct, on your documents, as well as on the investor portal, because it never fails. Like somebody failed to, spell out the LLC or whatever, like finding all these little mistakes that are going to delay everybody's, because sometimes some of the accountant teams, they don't release like one by one of the K-1s, they release everybody's. So if they found mistakes, they hold on to all of the K-1s. So you don't want to be a part of the problem, you want to be a part of a solution. So if you're invested with us, this is your call to action. Go into the portal and double check, triple check that your tax information is correct. So you don't want to be delayed on those K-1s. But usually we ask, and we always do. I've been filing for an extension for over a decade, and I just do that because I know there's always something that gets delayed. So just to avoid the last minute having to get an extension. If you file for an extension, if you are expected to pay taxes, then work with your accountant, work with your tax preparer to let you know, pending on the K-1 that you're missing, what is your tax burden, so that you can go ahead and send payment. You still have to send payment on time, payment of your potential taxes, because you don't want to be penalized. Just because you apply for an extension, it doesn't mean that you have to, that they give you the extension to pay. Now, if you are, maybe you're a reps and you are not, or you have some enough depreciation, and you have, your income is being covered by the depreciation. So if you don't pay taxes, then you don't need to send any payments, but you do need to file for an extension, because you're gonna be rushed to do that. Um, so yeah, let's see what else is coming up. We do have yeah, December, yeah, next Thursday, we have the virtual meetup. We try to bring it speakers as many times. We haven't actually bring speakers. We just because we've been so rushed. So maybe not this Thursday, but how about I'll try to bring speakers again starting next January. We enjoy doing that. We serve our community. We bring our cost segregation study is one, CPAs, tax strategies. So yeah, hold me accountable for that. Announcing speakers, different speakers that bring us their knowledge and they can answer questions from you guys. That we usually bring a SEC lawyer, and then again just answering questions, general questions, and giving us some of the what's new on the investing, and we have lender brokers too. So yeah, hold me accountable for that, doing that next January. Again, we've been doing these meetups for, gosh, this is definitely our third year. So yeah, but we've been also recording some of this so that we can share with people that cannot attend. So if you are listening to this later on and a question comes up, just text us back or email us back the question, and we'll be happy to write it down and then answer it here. But yeah, overall, let's finish this year strong, and we are going to be closing our fund in a couple weeks before the end of the year. So if you're still looking to invest this year, let us know because we still have some room, and then we deploy it and we put that to work and get ready for the next one. So we're excited for the next year. If you are already ready with your goals, share them. It's always good to see what other people is planning. Maybe we can collaborate. We can get in with you. Another aspect of for us that we are spending quite a bit of time is buying different businesses. Like as mentioned, we submitted a couple of LOIs for businesses, and we'll keep you posted. Initially, we're going to be buying those businesses by ourselves, but we would love to bring that diversification in different businesses, and maybe in the next year. But for now, this is all I have. I appreciate all of you being here, all of your questions that you sent. All of that is what's helping us, put this information that is pertinent to you and it's meant to build your set of skills. Again, repetition, learning basics gets higher the more that you do it. So keep showing up, keep bringing questions, and overall, let's invest together and let's grow our portfolio. Thank you guys. Happy holidays. And if you're gonna be able to make it next Thursday, if not, we'll talk to you maybe next year. Oh my gosh, it is the end of the year almost. All right. Thank you guys. Bye bye.